What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a little bit of the Ortex short interest and utilization data for both AMC and GameStop going into this next week. And we do have a really substantial catalyst on Monday after hours, and that is going to be AMC's earnings report. Now, at this point in the game, we kind of all know what to expect with AMC earnings. Is it most likely going to be an event where it's going to really start the next leg up? Most likely not, but what it does do is give us a really good insight into where the company is at the current time and where we see them going in the next couple of quarters and years. Now, a lot of people like to say that this is a short squeeze play and not a fundamentals play. Well, when we see the fundamentals of AMC, the company, increase, remember, the short thesis is based on the fundamentals. So if we are going to then see the fundamentals of the company continue to get better, that is only going to benefit us in the long run. Now, in addition to this, we've also heard a couple of direct statements from Adam Aron in the past about these M&A, mergers and acquisition opportunities and strategic partnerships. Now, we're going to go over a couple of these that have been hinted at and what could also potentially see coming up in this earnings call as well. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, you guys have seen the overall choppiness of the market over the last couple of weeks. If you do want to learn how to make money in this type of marketplace and get access to over 850 stocks alerted on the 1348, all of the private trading algorithms that we offer you guys, and the 40 private live streams every single month, make sure you check out that link down below in the description. So AMC closed the day on Friday at around $13.76, down 6.33%, and climbed back up a little bit in the after hours ahead of their earnings report coming out Monday after hours. But again, we're going to need to see the overall market kind of pick and choose where it's going to go and what direction the market's going to pick in order for us to really see that movement back to the upside in AMC. Now, going off of this very quickly, we're going to get a lot more important economic data this week, too. We have the Consumer Price Index right here on Wednesday, May 11th in the morning, the CPI. There are some estimates here. If these numbers come in hot or higher than expected, we're most likely going to see the market sell off a little bit because that's going to be an indication that nothing the Fed is doing is having any effect on kind of trying to curb inflation and actually make it transitory. So those are going to be some things that we need to look at just going into this next week very quickly. Now, going over to the Ortex updates here, let me just give this page a quick refresh so we can see exactly what we have here. We have 19.13% estimated short interest on AMC right now. Now, in addition, we have 98 million shares estimated to be sold short, 1.04% average cost to borrow, 2.32% max. Now, in addition to this, when we come over to GameStop, they've got about 19.16% estimated short interest, 12 million shares estimated to be sold short, a little bit higher cost to borrow, 5.69 on the average, and 7.94% max. Now, when we think about AMC, the company, and some of these strategic partnerships that we can see over the next couple of years or next couple of quarters, you have to think about why. So again, you've seen the mainstream media really start to talk about over the last couple of years how theaters are dying and streaming is going to take over. Obviously, with Netflix earnings and a lot of these other big streaming companies coming out and saying, yeah, well, that's not actually the case. And we are seeing AMC in the movie theater industry put up numbers like this. Doctor Strange in the Multiverse of Madness fires up summer box office with 190 to 194 million opening, and that was the Saturday afternoon update. So we are seeing some very, very good box office numbers coming out. And when we come over here and take a look at the domestic yearly box office, we're almost already at half of what we did last year, and we're not even halfway through the year yet. We still have all of May and all of June with some very, very significant movies starting to come out. Now, in addition to this, we do have to talk about some of these strategic partnerships and why, if we're seeing essentially the overall movie theater industry really succeeding with movies, Well, who could these partnerships be with? Now, we have seen these comments in the past. AMC CEO wants movies from Netflix, Apple, and other streamers in his theaters, and this came out on April 27th. And then we have this CNN article over here. To save itself, Netflix might have to play nice with an industry it battled for years. Now, I want you guys to think about something just a little bit broadly here. When you think about the way that a lot of these streaming companies make the most money, I don't necessarily think we're hearing people say, oh, I'm on this streaming platform so I can watch this specific movie. It's a lot of TV shows in short form content that is really going to be driving the success of a lot of these streaming companies. Now, with a lot of pressure now coming from analysts and even investors for Netflix to do something with their business, we could easily see some sort of a Netflix partnership coming up where they're going to be releasing their exclusive movies in theaters over the next couple of quarters or maybe even years. Now, why does this make any sense at all? Well, remember, back in the pandemic, we were seeing a lot of these big movie studios releasing their movies directly to their streaming platforms. Then, once everything started to open up, they then decided, well, let's start releasing movies back into the theaters again. And the performance of the movies in the theaters massively blew out all of the performance of the movies that were directly released to the streaming platforms. Now, in addition to this, we have also heard many statements from Adam Aron in the past where he's been looking at some of these merger and acquisition opportunities because they have about $1.8 billion worth of cash right now on their balance sheet that they can deploy however they want to. Now, do I want to see them start to pay off some debt with that money? Yes. Absolutely, we do want to see some sort of debt pay down, but we also want to see them use some of that money to be able to generate more revenue in the future, whether that's going to be through more theater acquisitions, some of these partnerships that they might be signing up with streaming companies like Netflix, Disney, Amazon. But again, when we take a look at some of these statements made by Adam Aron in the past, this is from the last earnings call right here. And if we can grow by bringing in high quality theaters in strong markets into our fleet inexpensively, that's a great opportunity for us. Beyond that, though, there is no specific company that we are ready yet to acquire. But I really want to say again and again that people who are watching and analyzing this company should think hard about what a strong management team can do with $1.8 billion worth of cash. And we are going to be seriously looking at M&A candidates, mergers and acquisitions. So the strategy that AMC is kind of set up with over the last couple of quarters has been to be closing down the theaters in underperforming locations that were not generating the revenue that they wanted to see and opening up theaters in locations that are going to be more high performing. So they've been able to do that. We've seen them do this in the past. And the other thing that we need to think about from this earnings specifically is that the actual earnings may not be living up to everybody's expectations, and I don't want anybody to start hyping this up. So we can see here with that, don't hold our feet to the fire too much for Q1, but boy, you are going to like Q2 through Q3 and Q4. We are expecting 2022 is going to be a very good year for our company. So this is coming from Adam Aron himself. So again, this Q1 earnings that we have coming up on Monday right here, yeah, it's a fun day so we can kind of see where the company is, where we expect to see the company grow and what direction they're going to be taking with these merger and acquisition opportunities over the next couple of quarters. But this isn't necessarily the earnings where we can come out and basically smash every single estimate and blow everything out of the water. Can we beat estimates? Absolutely. But remember, we are going to be at this for a little bit of time. And as this company starts to grow and utilize that $1.8 billion worth of cash, we're probably going to see a lot of fundamental increases in the underlying value of the company. So that is going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend, and I'll see you guys in the next one.